Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News website. I've got Joanne Freeze from Cadente on the line, and we're going to talk about their copper project. Joey, thanks very much for joining me today.
Thank you for hosting me.
And Joey, let's get right into the guts of your news that you put out a couple days ago. A couple things really stood out to me. One of the highlights was a smaller initial throughput for a lower initial capex, reduce initial capex expenditures. You made a nice quote, and I'll quote you now. While the work will take a few more weeks to complete than initially anticipated, we are very excited to be able to demonstrate optimization that are expected to result in substantially improved proposed mining project at Cañariaco. The Alsenco 2021 PEA will not only show a smaller, higher grade starter project with lower initial capex and accelerated payback period, but will also show other opportunities to lower capex and opex and implement better ESG, end quote. Lots there to talk about, Joey.
Yes, absolutely.
So why don't you expand a little for us?
Sure. Well, the first thing we looked at with Alsenco in the desktop study, and then this has come through on the P and been worked on in the PEA and holding well, is mitigating the need for a roaster. Now we have a little bit of arsenic in our deposit, and people, I'm going to call it, overreacted. And thought we needed a roaster. Now it was the same roaster that Codelco implemented for 4% arsenic, but ours is closer to 1%. And actually what we've shown is, or we're expecting, I can't, all the results of the PEA will be out when it's actually final. But the concentrate grade with no roaster, so reducing our capex by 15% alone on this one item is should be 26% copper. First 6 years will be 3.7 grams per ton gold, and then 84 grams per ton silver, and only 0.49% arsenic. So that's excellent. A little bit lower on up to 0.52% arsenic life of mine, and a little lower on the gold and silver, but still very significant. So that's the number one thing. Is we just understood the model. They did a geometallurgical model and then did an NSR model based on that, and the fact that we can do in-pit blending and starting smaller really helps with that, of course. So understanding the deposit better, starting as a smaller operation, allows us much better use of the mineralization that's there, the grades. And then the next thing is, we'll ramp up, and the idea is probably go double. So if, in fact, it was like 40,000 tons per day initially, go up to 80. And you just put a second a second line in. So you're not, it's not like you have to put a lot of capex early because you're eventually going to get bigger. The other thing that's really great is it's going to be one storage facility for both the strip or the waste and the tailings. And because they're different size of material, they actually mesh together, so they'll take much less space than if you had a tailings facility and a waste facility separately. So the volume sits in together, or I should just say the volume altogether, it meshes, so it's much smaller. And then it'll also be dry. So because the waste is already dry, only the tailings were wet, you're filtering less. So we have to filter all the wet tailings that come out of the mill, but when you put it together, it's dry. And when things are dry, they're much more stable. So industry best practices now, people are trying to move away from wet tailings to dry tailings, but if the tailings are alone, it can be very expensive when they're sitting. Anyway, just dry stack tailings can be much more expensive, but luckily what we're showing so far is it's affordable, and that was my big concern.
Well, on the ESG side, that's that's you don't have to worry about tailings dams bursting and stuff like that.
Yeah, much more stable situation. So, and my concern before was if we, ESG stuff is everything you want to do, but can you do it economically? And, that was the keys, and it's looking good. I mean, we don't have the results yet, so, but it's coming. But it's really great. And that geometallurgical modeling was huge because our understanding of the deposit, you knew your overall grades, but we didn't really understand the deposit in 2011 nearly as well as we understand it now.
And that would start out as in the oxides, correct?
Well, we don't have a lot of oxides, but you're right. We have a little bit of supergene enrichment. And yes, it'll start in slightly higher grade. Yeah, I think it's up to 0.58% copper.
Wow.
Yeah, overall. I mean, not that we don't have grades a lot higher than that, but I'm talking about average.
And in your previous PEA, what kind of numbers were you using for the copper, the gold, and how did it look using those grades compared to today's
Um, yeah, so grades or prices are you talking about?
prices? Sorry.
Prices, yeah, okay. So I'm just going to flip to a little information here so I don't, so I remember all my numbers. Um, so we started with 225 copper as our base case. Now in the end it was 250 copper. Or I should say long term, we've been talking about the numbers we got out of 250 copper, using 250 copper. And that's what Goldman Sachs showed, that we were in the lowest quartile of 84 upcoming copper projects based on price of copper needed to go into production. So based on 250, we're very, very low. I don't know how many of the 84 are lower than us, but not too many, but lowest quartile. Now that gave us an NPV of approximately $1 billion and a 17.5% IRR.
Wow.
Now, as you move up at 325 copper, it's just under 2 billion and 24.8% IRR. Using as high as $4 copper, it's 2.86 billion and 31.2% IRR. And these are all post-tax dollars. Now that's on the bigger project. Now that we're looking at starting smaller, often your NPV and your IRR is less initially because you're producing less copper, right, and gold and silver. But we're looking at having a longer mine life. So I shouldn't quote numbers because they're still to be established. But
there's some offsets there, because even if you are starting out smaller, we've got a more robust price of copper and looking like it's going to get even more robust. So there are some offsets there.
Totally, absolutely. And our base case is now 325 copper, not 250 copper.
Okay.
We always get to show the sensitivities to copper price in the.
And copper is still $1 more than that a pound right now, and
Exactly.
with all we might as well talk about copper itself. Green gold, it's often called. It's the new oil. With all this push for electric vehicles and rewiring the grid so that they can serve those electric vehicles. It looks like there's going to be a lot of copper demand, and there's not nearly enough copper mines in the pipeline to feed that demand.
No, you're right. And I like to say gold is money, but copper is life, because you just can't live, without copper.
Well, and that's
quality of life.
That's even becoming more true with the electric vehicle revolution.
Absolutely, yeah.
And we talked about this last time, but I don't think people really realize how, a lot of the developed countries are using, ancient power grids that need rewiring to make the electric vehicle revolution a reality.
Yeah, you're absolutely right.
Not a day goes by that we don't hear about another car company building batteries, building electric vehicles. So it looks like the supply demand balance looks to be pointing towards much higher prices for copper.
Yeah, absolutely. I agree.
And you said you put it in a little bit of context about, how many peers are out there. When was that Goldman Sachs study done?
That one was actually 2 years ago, and that was deficit denied, delayed, not denied. And then there's been more recent research, actually just this last week, by both Haywood and RFC Ambrian, and they're showing us as being the 10 out of the top, what they consider the top 23 projects. This is Ambrian's report, although Haywood doubles on some of this comment too. Of the top 23 projects, Cañariaco Norte is 10th largest and 6th highest grade. And that's another really interesting thing for us, because I never imagined we were, in
That
exactly,
high?
yeah, in both, right? But we were considered low grade when we first started working, and I still have meetings with people, and they say, "Oh yeah, but you're very low grade," and I'm always explaining, but we have very good economics because it's a low strip ratio. We have soft rock, we have water at site. We don't need to build. We'll have grid power. We already have roads to the project, but now it's like, wait a minute, no, just look at all the other projects that need to come online, and our grade is just fine. Thank you very much.
Well, and if you compare it to when you and I have been in this business for a long time, remember some of the how things have changed from the 90s to today
Yeah.
of, what people would call low grade before is now turning into high grade,
Yeah,
considering what's out there.
absolutely. Yeah, correct.
And did they do any in those research reports? Did they do any comparison and valuation relative to of those 23? You guys got to be one of the lowest valuation of all of them.
Yeah, we're definitely, we're not the lowest, but there's definitely some really good comparisons, and I won't get into it right now, um, but people can go to those firms for the research, or look them
Joey,
up.
is it possible if people email you that they could receive those reports?
Yeah, I'll put them in. We'll make sure they get them, whether it's through us or through the actual people that put them out is the best thing. But I can certainly coordinate that.
Okay,
Absolutely.
so where should they send the email?
Just investor at cadentecopper.com.
Okay. And I'd also like to mention that not too long ago, a few weeks ago, we did an interview and we talked quite extensively about the company and the project and all that stuff. So if you go to my YouTube channel at Rocks and Stocks News at YouTube, you'll find that interview. But yeah, Joey, I imagine your phone's ringing a little bit more these days.
Yeah, it's definitely interesting times.
Are you hearing from institutions and retail?
Yes. Yeah.
Okay. Well, I just wanted to do a brief sort of chat today about that news release because, I'm always on the hunt for copper projects. I'm very bullish on copper, but my challenge, Joey, is finding good copper stories, which are a lot harder to find. And it gets back to our talk about the supply chain. It's really fractured, relative to the demand that's building.
Yes, it is. Absolutely. It's
Okay.
going to be interesting. Next year is going to be a really interesting one.
And you expect that PEA, what, in the first quarter or something like that?
I expect it in January. Yeah.
Oh, wow.
Yeah.
So we're not talking, a month and a half kind of thing for a new PEA.
Yeah, that's why I stated in the news release, some weeks delay, not months delay.
Month.
Now, having said that, until you get it, you actually receive it, you can't, like somebody, I love the question of when are you going to release it? Well, the answer to that is we're going to release it as soon as we get it. But when do we expect to get it is, yeah.
I get a sense that you don't want to sit on that for too long. You want to get that out as soon as possible.
Well, and I mean that's full disclosure. You just do that, right? As a public company, you don't sit on information. But yeah, absolutely, we're very excited about that coming out. Yeah, and
Good. So, well, that's what we got. That's the biggest catalyst I can see ahead for you guys, right, Joey?
absolutely, yeah.
Now, beyond that, are there some more catalysts?
Well, we're also working on a definitive agreement with Goldfields for our Erica Pie project, which they want to option and earn into. And then we have our project we optioned in northern BC, which is very interesting. Waiting for results on our first phase of work on that. And we have one other porphyry that's optioned out to another junior, but I don't really know what they're doing on that at this moment.
Now, is there room to grow the resources at Canariaco?
Yes, there are, and I what I hazard to say so much about it because what I found is that, well, first of all, I'll explain what it is that within 5 kilometers we have 3 porphyry targets. Cañariaco Norte, well drilled off. We've got all the resources measured, indicated, and inferred. Is over 900 million tons. So 750 is measured and indicated, and then another over 100 is inferred. Cañariaco Sur, we have 15 drill holes into it. We know it's a porphyry deposit. I'm allowed to call it that. It's got lots of copper. It has 0 arsenic, so it would be another blending opportunity for Norte if we need it. Although all our work at this point is just dealing with Norte. We haven't drilled Sur off to the point where we know how big it is yet. So we haven't done a resource calculation on it yet. We probably could do, but we're waiting for permits to expand that one. And then Quebrada Verde, which could be in fact just an extension of Cañariaco Sur, has never been drilled. And it's got all the same geochem, geophysics and such. But I've recently been doing an analysis of the stream sediment sampling that was done in the 70s. Because to be honest, the highest grade in Norte was found by stream sediment sampling and then drilling. So not a fancy geophysics or too fancy geochem, just stream sediment sampling and then go drilling. So that's helping us get a better idea of what we've got at Sur and Verde. But my point was, we don't need those to be economic. All these numbers, everybody's comparing us. We're 10th of, and I should say, of the developing projects, we're 10th largest and 6th in highest grade. It's not just of all projects that have, might be earlier stage. But in any case, so why wait? I mean, we are applying for new drilling permits and such, but permitting in Peru for exploration stage can take a bit. Whereas I think it'll be faster to just move Norte straight into feasibility after this PEA and march that along and then see what comes of Sur and Verde. But it's not going to, we don't need it, is my point. And some people get hung up on, oh gosh, you're not going to know what you really have until you drill those. Well, yes, we know. We already know what we've got in Norte, and it's plenty.
Well, that's a good point to end on because I'm going to close and talk a little bit about your valuation. So thank you very much. And if you want, you can hang around for my closing pitch and we can have a little chat at the end.
Okay, sounds good.
So there you go, folks. This company has a $47 million valuation. They've got a large resource, as Joey mentioned, in relative to what's out there. That's in the M&I. A lot of it's in the M&I category, so it's not inferred, measured and indicated. They're doing an updated preliminary economic assessment, which would, contemplates lowering CapEx and lowering OpEx. And they've got a lot of good IRR, even at a significantly lower copper price, but I think it's going higher. Just to put the valuation into context, over the last 20 years, if you look at the takeovers of copper companies with PEAs, they generally sell for about 3 to 5 cents per pound of copper in the ground. And if you do the quick math on Canariaco, they're trading for a fraction of a penny per pound of copper in the ground. So I think that clearly shows the blue sky potential ahead for this company. And I don't know if they're going to be a takeover target. I would think they might be a takeover target, but either way, they can certainly move forward with proving up the economics and showing that. And that puts them in a pretty rarefied air in the copper space with companies with advanced projects. So if you're looking for copper, Cadente Copper is a hell of a good story to look at. And as always, my shows are for information purposes only. It's important for you to speak with your advisors and do your homework. And I really stress that homework. Go to cadentecopper.com. Give Joey and her team a call, and I'm sure they'd love to talk more about this. So on that note, have a great day, and we will talk to you soon.